Good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, July 22nd, 2025, recording this in the morning as always. I'm just going to keep this fairly quick today because we don't actually have too much news going on. We have a Fed blackout. There's no real sort of data. What the market seems to be waiting for is really, we're in the middle of summer at this point, so there's a lot less liquidity and just general action. The market is waiting for the August the 1st tariff headlines, just seeing what's going on. There's some sort of sense that in Europe there are two camps. There's those who want to retaliate, those who want to be more conciliatory. Still no signs of a deal with sort of Japan or China, or even sort of a substantial deal with India. So the market wants more information about that, and that seems to be pushed to the side. What we do have, we have some earnings, which is interesting. The earnings yesterday were relatively strong. So at this point, so far in the earnings season, everything's doing quite well, the banks and others. So we see the equities as sort of at their highs. What we get today, we just had Coca-Cola this morning. I just had a very quick look. It looks at first sight to be quite good. We have some of the sort of aerospace and defense companies reporting: Lockheed Martin, RTX, and Northrop Grumman. So that's going to be quite interesting in the context of the geopolitical sort of heat, which seems to be always ratcheting up. So interesting to see how those defense and aerospace companies will report this morning. The one which I'm going to be looking at as well is D.R. Horton, which is one of the premier sort of home builders in the US. So it'd be interesting to see the CEO's comments and guidance in terms of the home market in the US and the real estate market, and just whether these high mortgage rates and high 30-year yields are having, what kind of effect they're having. So that's some stuff to be looking out for today. Of course, tomorrow we have a bunch of interesting companies, especially obviously we've got Tesla, and probably the big one there is Alphabet or Google reporting. So let's keep an eye on that, and some other interesting companies throughout the week. So we have some earnings continuing to roll along. Really, the big week for earnings is next week. We get the August the 1st sort of tariff deadline, in theory, the deadline. We also have on the 28th of July the QRA, the overall sort of numbers. And then on the Wednesday, we have the composition, which is probably going to be more interesting. And then, of course, we start to get a lot of sort of economic data, as always, in the first week of the month. So probably the first week of August is really, there's got to be a lot of action at the moment. It seems as though the market is sort of in a holding period. And let's just have a look. We have a Powell speaking today, but it's nothing to do with a monetary policy, and so I don't think he'd be speaking about it. We also have Bowman speaking, but there was just on sort of supervision, as you can see here. And as you can see here, the only data we have this morning, we have the Philly Fed, which is kind of interesting. I mean, it's part of the mix, and we have the Richmond Fed, just in terms of those two surveys. So for sure, that's going to be interesting to look at, but probably won't be market moving. And just quickly, let's always just keep an eye on where the sort of expectations are for the Fed. Not much change, about let's call it 1.8 cuts still priced by the end of the year. So no sort of massive changes yesterday. Okay, just want to have a quick look around some of the different markets from maybe a bit more of a technical perspective. And if we start with, I just want to start with the bonds. So let's start with the US, just the basic yields here. If we look at the 2-year yield, not a huge amount of movement, but as I was saying yesterday, just sort of grinding downwards. And that is interesting because the Fed is being attacked. The real economy seems to be holding up quite well. And there's no reason, especially as far as I can see, for the Fed to cut aggressively. But the market does still maintain this idea that the Fed is on course to cut, 1.5 to 2 times this year. And so you see here these yields grinding down. But as I emphasized yesterday, probably just trading in a range. What's probably more interesting is just to see what's going on with the long end. You can see here on the 30-year yield that it has pulled back quite a lot. It poked its head above the 5%. It's pulled back a little bit. So if we actually just look here, look on a fib, just on a very short-term fib here, we can see just where that might pull back to. So it's pulled back to the 50% and already sort of bouncing a little bit here. I think it's going to be difficult for that one to come down a lot because, as I said, the economy is still strong. Inflation is relatively sticky. Of course, the QRA could change all of that, but basically, I think that's probably going to range trade. That might be the low for the moment, 4.9, probably then just trading between 4.9, maybe just poking up above 5%. What's also interesting is just to keep an eye on the curve. So if we look at the 5s, 30s, you can see here that's continuing just to sort of grind a little bit higher and steeper. And that makes sense if you have a market believing that the Fed will cut. So the front end of the curve is going to be anchored, and just those long-term yields are going to always like a ball. A beach ball is going to want to float higher. So you can push it down, but they'll sort of start floating higher like a beach ball. So you see here the 5s, 30s. And as I was saying yesterday, the 10s, 30s also reflecting a bit of concern about the long end and a desire for increased term premium. And the real yields are higher. And just finally, if we look at the 2s, 30s, not quite steepening as much. Uh, uh, but still, overall not wanting to sort of flatten too much. So if we look at the dollar index, the dollar sold off quite a lot yesterday. I think it was about 50 or 60 basis points. Let's just have a look and bring up the dollar index. There was no obvious catalyst for that. The one thing I could say is that maybe it's just sort of a structural thing that maybe a thinner sort of summer trading. But at the end of the day, there's still very much in a downtrend. If we just look at, sort of the EMAs, we can see that they all are still pointing downwards. So the 20-day EMA is sort of flattening out a little bit. But then again, if we look at sort of a fib here, just look at a fib, let's say a reversal, let's say this most recent sort of impulse, you can see here that the problem with the dollar index, just from a technical perspective, is that it's finding it very hard to get. It hasn't breached the 50-day moving average now which is this line here. It hasn't, like it failed back in a sort of a key fail on the 9th of May. Back on the 23rd of June, it couldn't get above it, and just most recently couldn't get above the 50-day moving average. And it hasn't been above the 50-day moving average. I think we have to go all the way back to the end of February, beginning of March. So the US dollar is still maintaining downward momentum. You can see here on the Fibonacci retracement where there was a bit of resistance anyway, like a sort of a bit of a clustering of horizontal resistance. You can see here that on the first fib here, just from this most recent impulse, it couldn't even get above the 38% retracement. So technically still pretty weak. And if we look at some other indicators, which I like to look at, just like stochastics and whatnot, you can also see here, let me just clean this up a little bit. You can also see here that with these indicators here, there is sort of a downtrend, just pointing up just a little bit, but already a reversal candle kind of coming in here. And you can see here that it was a little bit overbought just on this bounce, and it's now getting into neutral territory. So no reason why that can't come down a bit more. I'm not expecting the US dollar to collapse, but as long as the Fed's credibility is being attacked, as long as it looks as though the Fed will sort of cut at some point, and there's less trust in US sort of assets, there is a case for the US dollar to be structurally a bit weaker. Now, it has come a long, long way, so perhaps that's enough, and so we might just see some grinding. And probably the next sort of information we'll get will be the QRA and the data, as I say, happening in about a week. So let's keep an eye on all of that stuff. Okay, looking at some other markets, we see the equities, we see VIX, just before we get to that. VIX just very, very flat here, basically in that 15, 16, 17 kind of range, occasional poke high, but really not a lot going on there. So all things considered, it's not going to be a massive tailwind, but it's certainly going to be sort of beneficial for the vol focused funds. So as you know, there's quite a lot of funds out there which focus volatility, and as the volatility grinds lower, they tend to sort of incrementally increase their exposure, especially to the equities. So that explains why we're getting sort of a slow kind of grind higher in the equities. And as you can see here, it's tempting to say that it's a bit overbought. You can see that at fib extensions, but it's done nothing wrong at this point. And if we look here on the Bollinger Bands, it's still getting towards the top of that actually. But I'll just look on the EMAs here. So if we look at the EMAs, still a very strong chart. No reason at all, technically, if one is long to exit this. Just grinding higher, probably looking for a little bit of more direction there. One thing I would say, which I did say yesterday, let's just have a quick look here and look at the on the Bollinger Bands. just on a sort of a longer term, you can see here very, very strong. This is on the monthly. As I was saying yesterday, you can see that it is pretty unusual to be at the topmost range of the Bollinger Bands on the monthlies. As you can see here, like for example, going back to July 2020 here, you can see that generally when it gets to the top of the Bollinger Bands, again, here you see it does tend to pull back, which is not at all bearish. It's simply to say that it is a little bit overbought. And, you know, we could expect a little bit of a pullback at some point. But again, that may just be back to the dailies, maybe a pullback to something like the 22,400 level or so. Nothing sort of particularly nasty about that. Just looking at the precious metals, they had a big breakout yesterday. Let's have a look here. I'll just bring this up. We had a big breakout in silver and also in gold. Um, as you can see here, breaking out again above the Bollinger Bands. But this looks, to be honest, there's nothing wrong with this chart at all. And if we just put that with the EMAs, we can see that you know, there was a little bit of sideways consolidation here, but these trend lines, these EMAs are still all sort of pointing upwards, and it looks as though the you know, structurally there's still plenty of good reasons to buy gold if you believe in the fiat currency debasement, if you believe in less trust in the U.S. assets, if you believe in central bank buying, if you believe that inflation is still a little bit sticky, and if you believe in you know, continuing issuance of long-term bonds in the US, there's certainly structural reasons to be long gold. And just looking on the shorter term technicals here, as you can see, all the EMAs pointing upwards. And it looks to me as though gold for sure could, you know, retest like some of that swing high up at about 34.75. On the other hand, there's, you know, if you want to put a little fib on there, the most recent fib, it did actually break above that, which was at about 33.95-ish. So that's interesting. It broke above that. And just keep in mind that it didn't do that a few days ago. So this is a bit of new information here. So that's now looking quite good. And the similar kind of situation, if we go over to silver, you can see here silver, a pretty powerful breakout. Look at these EMAs here, actually accelerating to the upside, if anything. You see the 20-day moving away from the 50-day. And the 100-day moving away from the 200. So a bit of acceleration in terms of the EMAs here. And what's not to like? This, again, similar kind of situation here for sort of gold, the pressure. So we know that silver has about 50% of its usage is in industrial applications. The global economy seems to be doing okay. And maybe it had a bit of a boost yesterday because I was just reading, as I was saying yesterday, there's a huge sort of hydroelectric dam project which the Chinese have just announced, which they want to construct in Tibet. I think the numbers I was reading was $175 billion construction, so a ginormous infrastructure project. Probably going to be sort of silver, copper used for that. And maybe that was a bit sort of a symbolic shot in the arm because we also see copper here after that initial spike on the tariff news from Trump. You can see that it came down to more or less about sort of 50% fib retrace here, and it looks as though copper is pointing upwards as well. And if you just look at the sort of the price action here in terms of the EMAs, all those EMAs also pointing upwards. So the momentum is definitely with the copper market. So metals looking pretty good. Another one I just want to have a quick look at. Just one of the markets we're following here, just coffee. So if we look at Robusta coffee here, interesting. There was just interesting in terms of what's going on here. There were some headlines just about you know, potential tariffs on Brazilian imports from Trump. But what we can see is that that was only a one-day flash in the pan. It basically sort of spiked up, and the momentum still immediately sort of whacked down. Quite interesting now. If you look at all the EMAs, of course, they're all pushing a lot lower. We're seeing here, you know, very strong sort of downtrend still in action. We've got a double bottom here. If that breaks, I tell you what, we might just get rid of that headline. If this double bottom breaks here, which you can see here is quite a lot of resistance going back all the way to Feb 2024. If that breaks, there's probably a little bit more downside, at least out to, let's say, 29.75 on the coffee. So coffee looking pretty weak. I also just wanted to have a look at the Cosby futures. So over in Korea, let's have a look at the Cosby futures, which had been a little bit sort of parabolic almost at some point. And again, having said that, they've broken a lot of levels, a bit of sideways consolidation here, but the EMAs, the 20, 50, 100, and 200, all looking quite solid. We are losing a little bit of momentum. And if I just push that out to, as I say, some more sort of classical technical indicators here, let's just have a look at those. The momentum signals on this particular indicator, set of indicators, is still sort of positive. It is trading at the top of the Bollinger Band, so you could argue it's due for a little bit, it's a little bit overbought. If we look at some of the stochastics here, it is a little bit overbought, and maybe you'd want that to come back down into the neutral range. But if we continue to get this sideways consolidation, and maybe even just a small retrace back down to the middle of the Bollinger Bands, which is essentially the 20-day EMA here, there could be more room for the Cosby to head higher. No technical damage at the moment. As you can see here, all the EMAs are all still positive. Momentum indicators are still positive. A little bit oversold, but no real signs yet of any danger. So interesting that the Cosby, in terms of global indices, is sort of still pushing very, very high. In terms of other markets, just want to have a quick look at oil. Oil is really, not doing much, and if anything, is a little bit weak. If we go over to oil, let's just have a look here. You could see here that, it had a push up on the sort of the headline news, Israel, Iran, all that kind of stuff. But basically here, it sort of failed. If we look just like even on a shorter term fib from that push up, you see here it failed at the 38% retracement here. And basically since then, hasn't done much. It's been a pathetic attempt at another bounce on this sort of uptrend here. It's sort of starting to break that. Just trading at the lower end of this in this pink box, which is the sort of you can see here, this is a longer term sort of a trade range, but not really doing too much at all. And so to be honest, oil, I think, is just weak because the global economy is okay, but it's not really expanding. There's still the danger of tariffs, and what we're now seeing is that the third quarter, so the summer season is actually sort of almost like peak demand because there's a lot of heating demand in places like Saudi Arabia, and that will be coming towards a close in another month or two, and we go into a slightly softer season in the sort of the third quarter, which we'll be getting into, and I just don't see any reasons for oil. Maybe not to collapse. I'm not saying oil should go down to $50, but we have, as I said, an economy, global economy, which is sort of on a plateau, not really expanding, and we're getting past the peak consumption in terms of the sort of the summer and the heating season. And at this point, we also have OPEC Plus, which is sort of gradually increasing their production. So I think oil at this point, it might just meander around in a range, maybe something around, let's call it, maybe down to 60, up to like $60 to $70 just here. Not a lot of money flows coming in here. So it's probably not a market to be, too actively involved in just at the moment. Okay, guys, I want to leave it there. As I say, it looks like a fairly sleepy day, unless Trump decides to sort of pump out some headlines. So that's it. Let's just keep on looking at things and we'll keep it going during the week. Thanks very much. Have a great day.